Hello everyone, George DeSantis here with a look at the market for the week ending April 28th, 2017. Before we get into looking at some of the charts, let's take a look at the disclaimer that I've written. Trading and investing has large potential rewards and large potential risks. So this video presentation is designed for educational purposes only and is not a solicitation or advice to buy or sell any securities or other tradable instruments. You must be aware of the risks and be willing to accept them in order to invest in the markets. So consult a licensed professional investment advisor for investment advice. I am not an investment advisor. We're going to look at some different charts today because I was unable to download from my data provider for the usual supercharts program. So I'll be looking at charts on TC2000. Let's begin by taking a look at a few of these charts. Now, before we get to the charts on TC2000, I'd like to take a look at that chart we have looked at many times before, and that is the regression channel on the S&P 500. Made a few notes here for you, but what we can see is that as of last week, we were at about the 10% level, and we discussed the fact that this is an oversold region. And typically, when it gets oversold at this level, it tends to rally either up to the 50 level and pull back a bit, or even up to the 90% level. So right now we have the S&P at 38% closing here, and it gapped up once, twice, hit the 50% line and pulled back a little, not much. So there's room at the top because you could typically go to the 90% line before you get any major pullback. So there is room at the top, and that's one of the charts I wanted to share with you. It looks as though there's a chance that we might rally from here even further. We'll discuss that as we go along. So let's take a look at some other charts on TC2000. So here's a chart of the S&P, a monthly chart on the software TC2000. And just a quick look. The trend is clearly up. The 9, that red line, is above the 30. The 9 EMA above the 30 weighted moving average. And the 4 exponential moving average, this yellow line, is above the 9. And this crossing of the 4 above the 9 and 9 above 30 occurred way back here, earlier part of this year, of last year. So on the monthly chart, we clearly have an uptrend. What I have on this chart that we don't see on the super charts charts is the Schiken money flow indicator, and we can see how the money, or the institutional investors, were buying this market, of course, as it went up, and that's what pushes it up anyway. The MACD histogram is continuing to trend up. So let's take a look at a weekly chart. Here's a weekly chart of the S&P 500, and what I want to point out here is that the S&P rallied all the way up, riding the upper Bollinger Band. The blue line is the Bollinger Band with 2 standard deviations. This yellow line is 3 standard deviations. And if you're not familiar with standard deviations, you can go read something about it, but it measures volatility, variability or volatility of the price. So we went here, we almost touched the upper Bollinger Band, and then we regressed, we pulled all the way back toward the 30 weighted moving average. So the market closed for the first time below the 9 since the 9 crossed above the 30. It closed for the first time here. That was a buy signal, according to Rick Monteith of eFuture Vision and his work. Right now we can see that the 4 has crossed over the 9. We had a really good week last week, and if we look at down here, we can see that Williams percent R is above the 20% line, and the money flow is showing us that the money is coming into the market. MACD is below the 0 line, but it's trending up again. So let's take a look at a daily chart. On the daily chart, we can see that the S&P rallied all the way up to 3 standard deviations, and that's rare. And of course, it consolidated that move, pulled back a little bit on Friday. And we still have a nice uptrend with 9 above 30, 4 above 9, MACD above the zero line. Yeah, money came out of the market toward the end of the money flow came down toward the end of the week. You can see here on Friday. But it means when we look at the weekly chart, we saw that the trend is still significantly up anyway. Now, what I would like to do is take a look at some individual stocks. And when I say that, I want to caution that I'm not suggesting that you just go out and buy whatever stocks I look at here, because I cannot conceivably know what your financial situation is. It doesn't match mine. My portfolio could not be the same as yours. It shouldn't be. So I'm just going to take a look at some of the indicators on some individual stocks that I keep on a watch list. So let's start doing that. Should be a little different from what we usually do. And let's start there. First, well, I'll start with some of the stocks that I own. But again, it doesn't mean you should rush out and buy these stocks, and especially not in the quantities that I buy. I buy a few thousand shares, typically. So let's take a look at Visa. All right, so this is a daily chart of Visa. It went and closed above the 3 standard deviation line of the Bollinger Band, and it has now consolidated. But if we look at the weekly chart, we see that it came back to buying opportunity between the 4 and the 9 here, and then it trended up again. You look at money flow is coming into the market. And MACD, although it pulled back a little bit, it's still above the zero line. And here's a chart of Microsoft. I also own this one. We can see here that since the 9 EMA, the red line, crossed above the 30 weighted moving average, the green line, this stock has been trending up. It was $50 a share all the way down here, and now it's at about 68. Well, the 9 is still above the 30, and recently the 4 trended up above the 30, and it's closing above the 4 EMA. This is a very strong chart as well, in my opinion. You could see the Williams percent or 30 is remaining above that 20% line, the dotted line. MACD pulled back a bit, but it's trending up again above the zero line. And of course, money flow. Money is coming into this stock. RSI 12 crossed back above 60, so I like this one. Let's take a look at another. Here's a weekly chart of Netflix, which I also own. We can see that since the 9 crossed above the 30 here, all the way back in October of last year, well, even September, October, yeah, in this area, we've been in a nice uptrend. We gapped up, well, we had a dramatic move up here. We consolidated, moved up again, consolidated, and then we moved up again recently. So what I like is that the money is still coming in to this stock. And we can see that RSI 12 just crossed back above 60%. And the fact that Williams percent R is still above that 20% line tells me that the momentum is still pretty strong. Remember, this is a weekly chart. We're basically going to look at weeklies because I'm not trading these day by day, you know. So let's look at another one. Here's another stock I own, which is NiSource. NI is a symbol. And I usually buy this in the beginning of the year, right around here, and then sell it in June. Because if you look at the seasonal charts, it tends to trend the first 6 months in a year, then it pulls back. So I'll be out of it June 1st, somewhere around there, depending on what the chart looks like. But you can see the money comes in somewhere around the February area. Money started coming in at the end of January, and it's still coming in here. So this is what I do. It pays a small dividend between 2 and 3%, I believe. But that's one that I own for the first part of the year. And here's my largest holding, which is Facebook. At this time, it used to be Apple. I switched to Facebook some time ago. You can see what's happening here. Look at the money coming into Facebook. We hope that we get good earnings next week. I think it's Wednesday. But what we see here is that the 4 is above the 9 is above the 30, the trend is up. We got a nice gap up here last week, and this is still looking pretty strong. The fact that Google had such a good earnings report makes a lot of people believe that this stock, Facebook, is going to do likewise. So I'm holding. I hope I'm right. I have a nice gain. Wouldn't like to give it back. You can see down here also that RSI 12 is really telling us this trend is strong, as well as percent R. Let's take a look at something else. Here's Apple. I wrote Apple up, took a nice gain in Apple, as I think I mentioned before, and bought some calls with some advice from a friend of mine. Bought the in-the-money calls and the 140 calls. So that's what I'm holding now on Apple. But you can see the money is still there. The 9 is above the 30. The 4 is above the 9. I like where the percent R line is. Momentum is still pretty strong, and we'll see how they come in with earnings. But I'm holding the calls. I might buy the stock at 140 and exercise a call, or I might just sell the call if I have a gain. Just so you know that not all the stocks that I buy stay in the green or even end up making money. So I bought Berkshire too soon. Let me show you the daily chart. I bought it at around 175 and didn't take the opportunity to sell it when the 9 crossed below the 30. That is usually my sell signal. However, I'm holding it. It had a rally here. Let's hope that it's not a false breakout, and that I get another rally up here. It's a long-term holding. I'm considering it a long-term holding, but it's a little risky right now. So you win some and you lose some. Well, I'm not selling it yet, so it's not a loss yet. Paper loss, right? So let's take a look at another. Well, two stocks that have been on my watch list for a while, for a long time, are Home Depot and Costco. So let's take a look. The daily chart on Home Depot, you see it rode the Bollinger Band with three standard deviations all the way up here, and it seemed to be consolidating a bit here. That's on the daily chart. Notice that the money flow is increasing. And Williams percent R, after doing this regression here, is now above the 20% line. RSI 12 is trending up. But let's take a look at the weekly chart. On the weekly chart, what we find is that the market went up. Home Depot's price went up, hit the top. In fact, closed very close to the Bollinger Band with two standard deviations, pulled back into the buy zone here, into one of these buy zones, and then it rallied from there. I like Home Depot a little better than Costco right now, and I'll show you why. If we look at the daily chart on Costco, let's look at the daily chart. We'll see that you don't have the same money flow on Costco as you did on Home Depot. Here's Home Depot. You see, you have a nice, increase in money flow here on Home Depot. So if I had to choose between the two, I'm choosing Home Depot. But they both look pretty strong. We're coming to the end of the video because we're only allowed 15 minutes. But a friend of mine recommended the FFTY ETF, and what it is very interesting. It's an ETF of the Investors Business Daily 50 growth stocks, the IBD 50. And if you're interested in buying, or you don't want to take the risk of buying an individual stock, you can buy, and you want to buy some growth stocks, here's an ETF you could use. I'm going to stop here. In my email, to those who receive the email, I will mention a few other stocks that look good on these charts. And I hope you have a wonderful week next week. And we'll talk to you again then. Have a nice weekend.